Hi, good evening everyone. I'm Amy Lei, the stock trainer in Homely Chart Company, which is a stock training school. And today, this video is my 23rd video of this channel, Amy Stock Analysis Daily. And thanks for your support all the time, and nice to see you again. And today, the topic, today is the first part of the series about claim victory in stock market. Okay, and in previous sessions we mentioned the criteria for a good profiting model. We realized that setting up your own effective profiting model is extremely important, right? So we mentioned the most important part for a good profiting model is you need to set up the trading strategies, including your filter, entry, exit, stop loss, right? And then about filter, we have talked about this. You pick the right stock. What kind of stock is the right one? We want the big boys in. We don't want retailers, right? And later we can also talk a bit about this. Although we already covered this filter, right? And the filter is the first step. If you pick the wrong choice, you pick the wrong stock, then you realize that in future it will be very tricky to trade. Although you can make profit maybe, but it will take a lot of energy to do the analysis, to buy and sell. That's energy consuming, time consuming, and you also have to let's say take a lot of prices if the price is quite volatile. Big jumps and big jumps up and big jumps down, then you have to take a lot of pressure, right? So this kind of share tricky to trade. So our best strategy is at the very beginning we don't pick this kind of shares, right? We pick those in future would go up stably at a faster speed, right? With the help of our multicolored dragon, we can achieve that goal, right? In previous sessions already mentioned. And then last session, I shared with you I shared with you the trading strategy for entry, exit, and stop loss for short term, right? And today we will focus on medium term to long term trading in terms of entry, exit, and stop loss. Okay, so firstly we check the key to medium term to long term trading. Firstly, of course, pick the right stock is the most important thing. So we need to make sure the upward momentum is strong in future. It's the same it's the same as for short-term trading. No matter you want to trade for short-term or medium-term to long-term, you always stick to the strong ones with great potentiality in future. Okay, so that's why multicolored dragon MCD is so important. And then for medium-term to long-term trading, we need to know that better not to try to pursue buying at a very low point and selling at a very high point. Why? Show you an example so you will understand very easily. For example, this is let's say Sembcorp Marine, right? So what we see is this seems like a low point. It's like the bottom, the very low, right? After that, we have the second low point higher than the first one. It seems like the trend is turning bullish. This would be the low, would be the bottom, the very low point. And then after that, we see the price, although you see a drop, but then get support at the level. It seems like bottom, right? So for those who want to buy at the very low points, they might want to try some bottom catch here, especially when they see, wow, get support at the low point. Again, when they see there is a bullish candle, they may want to buy, right? They want to buy in. Then the following day drop, then continue dropping further, then another day it seems like a bullish candle, and then but the problem is if you have bought here, so after the price drop for another several days, are you still there? You still in, or you already left after the short-term drop here? So if you still in, let's say, wow, this seems like a bullish candle, and the following day another very bullish candle, you might feel very proud of yourself. Wow, I successfully catch the bottom. This is bottom catch. I buy almost at the low point. It's not an exact low point, but it's already very close to the low point. I buy at the best timing, right? So you're very proud of yourself. But then suddenly another downward gap, and then it's a big jump, big downward jump, and then the price continue dropping further, hit new lows. You think this is the bottom? Wow, not necessary. This is long-term downtrend. When it's long-term downtrend, you can never imagine how low the price might jump, might reach. How low the price might reach. In other words, if you try to catch the very low points, you will always buy too early. You will always try to buy here. Maybe someone might also want to chase after the rally. Chase after the rally here or here. If they bought here or here, they may have to incur great loss. They have to suffer great loss, right? So this is why we don't try to buy at a very low point to try to do the bottom catch. Yeah, because you will always buy too early and you will be stuck. You buy, you will be stuck. So for Sembcorp Marine, up until now, you are stuck if you think this is the bottom, right? Okay, so this is we never try to buy at the very low points. And then show you another example. We all know that UG Healthcare recently is extremely bullish, right? It's extremely bullish. So, but to tell you the truth, I know a lot of people who have bought around this candle. They managed to catch these two big bullish candles. So this is a very big profit. And the following day, when the price you see it's a bearish candle, right? So many people, they just sell because they feel that this might be the high point. This might be the high. And then after that, wow, another big jump. They are also quite proud of themselves because they managed to sell very close to the high point. They want to sell at a very high. They think this is a very big jump. But what happened in future? What happened? After a correction, of course this is a very big correction, then the price begin to rise again. You think this is the historical high, but the price would hit a new high. So when the price is in uptrend, long-term uptrend bullish, you can never imagine how high the price would reach. So in other words, if you want to catch the high point, want to sell at a very high point, you will always sell too early. I know people who sold away here and then never pay attention to UG Healthcare again until the price hit a new high here. But it's already too high, it's already too late. They simply miss the opportunity because they believe this is the historical high. They want to catch the high point. They want to sell at a high point. And then, in the end, they miss the big rally in future until now, right? Until now, this is a very big rally, but I believe many people have missed this because they want to catch the previous high. They feel they are very professional because they catch this high. They manage to sell very close to the high, but you catch this high, you miss the future big rally. So if you want to catch the high points to sell, you will always sell too early and miss the great opportunities in future, the big rally in future. Okay, so it's very important. Never, I emphasize again, if you want to trade for medium-term to long-term trading, never try to pursue buying at a very low point and selling at a very high point. Okay? And then thirdly, the best entry point for medium-term to long-term trading, usually if you buy at a very, very high position after a big rally, then you just buy and want to hold for medium-term to long-term. That's not a very good choice. That's not a very wise decision to do, because for medium-term to long-term trading, better you buy at relatively a low position. So the best entry would be you buy after the long-term bullish reversal. This is a very good buy point for medium-term to long-term. And then another good entry point for medium-term to long-term should be if it's already in uptrend and then after a big correction. How to judge it's a big correction? You can check the time duration and the price change rate, means how long the correction lasts and how big the correction is, the price change rate. So this is how we can judge whether or not it's a big correction. So we have mentioned that it's very important to follow the big boys, because the big boys can pump money into the stock market continuously. You follow them, then the share in future higher probability would just go up stably at a faster speed. So this kind of share would be the best choice for you because it's easy to trade, no big fluctuations. And this is about Monte Carlo Dragon. You follow the red bars because they represent the big boys. Green means the retailers, the yellow means the hot money. And we mentioned the key to medium-term to long-term trading. First key point is we need to pick stocks with strong momentum, with great potentiality in future. So you check Monte Carlo Dragon first to make sure this one has great potentiality. So how to the details about details to judge how can we regard it as a share with great potentiality. You check if this one has big boys, let's say has big boys inside and no retailers or just a little retailer, then this one should be a share with great potentiality in future. So we have some criteria. Let's say the big boys, the red bar, at least must above 25 and stably above 25%. If it can reach 50% and stay stably above 50%, that would be the best. But for some, at the reversal point, maybe the big boy is just wrong, just stably above 25%, also okay. Another very important standard is we don't want the retailers, at least retailers better not to exceed 10. If it exceeds 10%, then it might not be that good. Okay, so this is the details, the standards for how we check the performance of Monte Carlo Dragon to make sure it has great potentiality in future. Okay. Okay, then the next question is how to find the proper entry exit and stop loss, right? And we need the help of some indicators. And the indicator I'm sharing with you today is this colorful lines like a rainbow. We have white, blue, yellow, red, and also one green, if you can see very clearly. Okay, if you see very carefully, there is a green line. All these lines, it looks colorful, just like a rainbow, right? You're right, because this indicator is called homely rainbow. Okay, so for homely rainbow, we see the colorful lines, they have a meaning. The white lines, they represent the long-term trend. Altogether, we have 4. And then we have the yellow lines. The yellow lines, they represent medium-term trend. Medium-term trend, we have 4. Okay, and in between the yellow and the white, we have blue. Blue is longer than yellow but shorter than white, so that's medium-term to long. Okay, medium-term to long. Okay, and then we also have 3 red line and 1 green line. Altogether, the 4 lines represent the short-term trend. Okay, we know that trend is the core of technical analysis, and long-term trend is always the most important. So means the white lines is always the most important to check. If the white line is upward and the price above the white lines, means for long-term this is bullish. If white lines downward and the price below the white lines, means long-term it's bearish. Better not to touch those shares in long-term downtrend. If you want to trade, want to buy and hold for medium-term to long-term. So we mentioned when would be the best entry point for medium-term to long. One occasion is we buy after the long-term reversal, right? So means you check the white rainbow lines. Previously downward, the price below, and then if we see the price finally successfully stand above the white lines, then means it's already reversed from long-term bearish to a bullish. So that's the best entry point for medium-term to long-term trading. Means here, right? Means this, means here. This is the long-term reversal point. We buy after the long-term reversal, and usually when the price successfully stand above the white lines, we call it birth of dark horse. Birth of dark horse is a very good entry point for medium-term to long-term trading. Remember, it's not for short-term trading, it's for medium-term to long-term. Okay, and then the other good entry point, remember, is when we have a big correction in uptrend, right? So this is all in uptrend. So when would be the second best entry point? Of course here, right? Why? Because at this point we see previously the price already dropped below the yellow lines and then continue to drop, touch the blue lines, get support, and then go back above the yellow lines again. So this, at this turning point, we buy is a good choice for medium term to long, because this correction here is regarded as a big correction. Why? Because the price change rate is a big one. How to judge? The price drop below the yellow line and also touch the white line, means the price change rate is a big one. So after the price go back above the yellow line again, that's the second best entry point. And we can call this kind of entry point as speedy dark horse. This is the speedy dark horse. Okay, after a rise, the dark horse speed up. Okay, and then apart from here, actually if you check at these turning points, also can be regarded as a good entry point for medium term to long, because the price consolidate around this range for a long time. It must be more than 3 months, at least 3 months, I'd say here. Although the price change rate is not a very big one, right? Because the price never dropped below the yellow line. The yellow line provides very strong support. The price never dropped below, but the time duration of this consolidation area is a long one. It lasts for a long time. So also means this is a significant correction. Still remember our criteria to check how do we tell it's a big correction. One criteria is the price change rate. This is a big one. Price change rate, this is a big price change rate. And the other criteria is time duration. This consolidation area, it lasts for a long time duration, right? And then this is also a very good entry point for medium term to long term trading. Okay, so means our entry point here, birth of dark horse, and then speedy dark horse. That's when the price drop below the yellow rainbow, then go back above the yellow rainbow again. And also if the price never drop below the yellow rainbow, but the consolidation lasts for a very long time, also regarded as big correction, also can buy again. Once the price break up the consolidation platform, right? You can buy. Okay, so this is for entry. How about exit? When do we sell? We sell when the price drop below the yellow rainbow and in 3 days never go back above the yellow rainbow again. We sell, means here we sell, means our buy point is here, our sell point is here, right? So previously if you have bought here, so you never sell because until here, right? Because after we buy, the price never drop below the yellow rainbow, so you keep holding all the time until you sell here. You have made the greatest profit this round of rally. After a significant correction here, you buy again and then keep holding all the time until you sell here, right? Because this is when the price drop below the yellow rainbow and 3 days. The candles here must already more than 3 candles. So after 3 days unable to go back, you sell. Then although next time the price above yellow rainbow again, you buy back, then you sell again. The last time maybe you don't make a big profit, or you just break even, manage to break even. But the important thing is you can avoid a big correction in future. That's the most important thing. Okay, so that's the most important thing. So how about stop loss? Stop loss is, for example, you buy at the birth of the horse, right? You buy at the birth of the horse here. You buy at the birth of the horse here, but you see the price drop below the white rainbow again, your stop loss, right? For example, you buy when the price go back above the yellow rainbow again, but you see the price drop below yellow rainbow again, you stop loss. Okay, but I need to remind you, it's not the case that every time the price stand above the white rainbow, it must continue going up all the time. For example, we check there are 2 shares. One is AEM, the other is SETS. And then for AEM, we see the price above the white rainbow here, right? Also the other rainbows, because they gather together, but we call it birth of dark horse. So after the birth of dark horse, for AEM, it continue going up all the time, right? But for SETS, here we also around the same period, we have the birth of dark horse, but the price just rise a bit, then drop below the white lines again. So this time above the white rainbow again, but it didn't rise much, and then drop below the white rainbow again, right? So why? So means what? For some shares, after birth of dark horse, it may continue going up all the time. For some, that's not the case. So why? How do we know that after the birth of dark horse, the price will continue going up in future, rather than like sites it go up just a bit, then drop below the white rainbow again? Reason lies in the money flow, lies in multicolor dragon, right? So we have mentioned checking multicolor dragon is the first thing, the most important thing, because we need to make sure this one has great potentiality. For example, I show you why for AEM and for sets the performance can be so different in future. You see, at the birth of dark horse, we check for AEM. Big boys already reached 50%, although not that stable, at least it reached 50, and retailers already disappeared completely. And after that, we have the big boys increase all the time and stay very stably above 50%. That's why it can be so bullish all the time. Okay, but for sets, you can see very clearly. The first time the price break up the white rainbow lines, so we don't have big boys, it's all yellow. And the second time, no big boys, all yellow. And then here, when we have the price drop below the white rainbow again, we see retailers increase all the time, but big boys never appear. So this is the reason behind why for sets, after the birth of dark horse, the price cannot continue going up all the time. So this means picking the right stock is really important. You really need to check multicolor dragon first to make sure this one has big boy in. That's the most important thing. And no retailers, okay? No retailers, and also we need big boys. No big boys, no chance for medium term to long term. I'm talking about medium term to long term, not just short term, okay? So, yeah. For example, show you some real cases so that you can understand better how to trade for medium term to long term based on the combination of homely rainbow and multicolor dragon. Okay, so for this one, I fast, right? We see previously the price below the white rainbow long term down, and then here we have the price stand above the white rainbow here, right? So we call it birth of dark horse. At the moment when we at the birth of dark horse moment, we see retailers disappear completely, and big boys currently is above 25% and stably above 25%. Only that the price just consolidate here, unable to break up the platform. So we know that this share has great potentiality in future, right? Because no retailers, big boys more than 25% and quite stably. So means in future it may have opportunity in future. Once we see the price break up the consolidation platform here, can you see the line here? This is the consolidation platform, and at the same time we check the big boy it begin to increase, right? So this is the beginning of a rally. So you buy means our entry point, exact entry point is this candle. When we see the big boys increase and price break up the consolidation platform, so we buy, we keep holding until now. It's until now, okay? So currently for iFast, we don't have a sell point yet, right? And then of course, this is the first type of buy point for medium term to long term. We call it buy after the birth of dark horse, right? And then we can check the software to check the performance of some other shares. Let's say Malaysia market. We check one example. No. Okay, so this one. Okay, so firstly we check multicolor dragon. Can you see At this moment, the retailers disappear completely. This candle, right? So this candle, you check the date, that's June the 24th, 2019. Okay, so the retailers disappear completely. Big boys already more than 50%, and before that, it's quite stable above 25%. So means it has potentiality in future. And combined with homely rainbow to check our position, right? So you see, when the retailers disappear completely, big boys increase, the price is still below the last white line. So our entry point should be the following day when the price successfully stand above the last white line and retailers already gone completely. So we buy. So after this candle, let's say this day, the following day you can buy, right? You buy, you keep holding all the time for medium-term trading because the big boys remain above 75%, means it's extremely crazy, extremely bullish. You keep holding. So this time we buy, then it just continue going up all the time. There might be some occasions when you buy, the price might drop first below the white rainbow. If that's the case, you stop loss, right? You stop loss. Okay, and then when to sell, we sell until the price drop below the white rainbow, already below for 2 days, 3 days, right? So we sell the following day. So we sell here, means for medium term to long term trading, I buy here, I sell here. So after I sell, we see the price in consolidation for a while below the white rainbow, below the yellow rainbow. Then when it go back above the yellow rainbow again, I can consider to buy back this candle because the big boys increase again and the purple line here turn upward. In previous sessions, I believe I shared with you the function of the purple line. If the purple line turn upward and is within the red bar, the price usually tend to rise for short term. So the buy point is here. After the price successfully above the yellow rainbow, we buy here. After we buy, if big boys increase, the price would hit new highs all the time. And then we keep holding until here, right? Price below the yellow rainbow, 3 days. Sell. See, this time it remain below the white rainbow, yellow rainbow for a longer time. That's why it's worthwhile selling when the price break down the yellow rainbow and able to go back in 3 days. So when you see the price above the yellow rainbow again, if you want to buy safely, maybe you wait until the retailers above almost disappear. This candle or this candle, you try to buy. But always remember your stop loss. If the price drop below yellow rainbow, you stop loss. Okay, that's until now. So if we check the very long-term performance, if you follow the trading strategies based on the homely rainbow, the yellow lines and the white lines, we buy here, we sell for once, buy and sell for once, buy and sell for twice, buy and hold until now. So actually we have catch the most of the profit for focus and we also successfully avoid the consolidation here because the correction and the consolidation here is a very long time, 2 months, more than 2 months I believe. So you avoid wasting time during these 2 months. Then you buy after the trend become bullish again for medium term to long term. Yeah, so this is, we call it maximize your profits. Yeah, okay, so this is a Malaysia share. Maybe you check some Hong Kong share. Okay, so for this one, this is a sub-new share. We currently the longest term should be medium term, because we only have the yellow line. We don't have the blue and the white line yet, because the history is not long enough. Okay, so for this one, here we have the price successfully above the yellow rainbow, but too much retailers, too few big boys. So this is not a very good entry point. Here, this is after a correction, the price successfully above the yellow rainbow again, and retailers disappear completely. So this should be a very good buy point. And considering this is a very long candle, so in future you buy if the price drop, and you can check the open price or the half level of this long green bar to set your stop loss for short-term trading. For medium term, after you buy, maybe you check the last yellow rainbow here, right? So we buy, then we keep holding as long as the price above the yellow rainbow. So that's until now. So we buy and hold until now. No sell point, because the price never drop below the yellow rainbow, right? And then maybe we check a US share. Okay, so for this one, okay, so for the recent performance, we see that previously long-term downtrend, white rainbow down, price below, and here we have the price successfully stand above the white rainbow lines, and also the big boys already above 50%. At this moment, already above 75%, and no retailers. So for short term and also for medium term, you can buy, you hold until now. This is for recent performance. And if you check the history for this one, for example, the previous performance here, let's say here we have previously the price above the yellow lines, you hold all the time. So here drop below, so you see here first day, the second day, it's a very big drop. If you see when the price drop below the yellow rainbow line, it just drop very fast at a very fast speed. So you don't need to wait until 3 days later. You can sell the following the second day here, right? So you sell, so very big drop for a very short time. It's a sharp drop, and then after that, when do we buy again? So we see here, although the price above the yellow lines again here, we see still have some retailers, big boys not too much. It's below 25. It's not a very good entry point, but here when another time the price above the yellow rainbow again, and we see the retailers totally disappear. Okay, so here maybe I try to magnify for you to check. Okay, so here retailers totally disappear, right? And this is the also the previous high. This should be the resistance, but you see price can stably above this level, so you buy. And also you check the performance of multicolor dragon. It reached 25% and already stably above 25% for a while. So means this is also not a bad entry point for medium term to long term. You buy, then you hold. Although here is a big jump, but still remain above the last yellow line, so you hold. You still hold. Never sell. See, although in between we have some ups and downs, we never sell here. We have the price drop below the first day, the following day it go back. So this is not the real sell point. It's a false breakthrough. We didn't sell because we wait for 3 days, right? So we keep holding until no sell points. wow, it's quite bullish all the time. You see, every time touch the yellow line, so no sell point. And remember, we say the second type of entry points, for example here, for medium term to long term, that's when either you have a big correction in terms of the price change rate, or you have consolidation last for a very long time. You see here the price consolidate here sideways for a very long time, more than 2 months. So this entry point is also regarded as a very good entry point for medium term. If you miss the previous buy point at the reversal moment, then you can also buy after such kind of big correction here. Okay, so you also here you see it's the same. Okay, so here first day big drop, and the following day also drop. So you don't, for this kind of occasion, you don't need to wait for 3 days, can just sell. Okay, just sell, then the price remain below the yellow rainbow for a while, although here we see the price above again, but we see the big boys keep decreasing and retailers are also there, so better not to enter until you see big boy retailers disappear, right? These retailers disappear and the big boys increase to 25%. Here you can try, but don't forget your stop loss. If the price, you see here, if the price drop below yellow rainbow again, you stop loss. So we mentioned stop loss. This is the moment you need to stop loss. Okay, so previous time we tried buy and hold until we sell here, and then this time we buy and we stop loss. Okay, so you see, this is a very good point to stop loss, because after that big drop, and although we have a rebound, but you see, because no big boys, the price cannot just continue going up. You see, up and down again. So when you see the price already below the white rainbow lines, means long-term bearish reversal. Just put it aside. This share has no chance. Okay, this share has no chance. Okay, so you see, so long-term bearish, it already turned long-term bearish. So if we zoom in to check, if you follow the trading rules based on the rainbow and also the multicolor dragon, right? And then our buy point is here. After the price above the rainbow lines, previously dropped below the white rainbow a bit, and then here, when we have the price back above the rainbow lines, and also big boys more than 25% already, we buy and we never sell in between. You see, that's powerful. We keep holding until here. It's already the best trading strategy for you. You buy and you hold all the time until it's the real big top. We didn't sell at a very high, but it's already the best sell point, right? After you sell, although we try to buy back again, but we stop loss very quickly, right? So we have no loss at all. But you check this time, this period, how big profit you can make. It's quite crazy, I tell you. That's tripled, your capital tripled. Is 200% of profit. Okay, so that's crazy, right? Okay, so this is the method I shared with you. I think with this series about claim victory in the stock market, I have really shared with you how to set up your own trading strategies and your profiting model. Either you trade for short term and you trade for medium term to long term. Okay, so tomorrow is Friday, so it will always be the summary on market performance, right? So weekly summary tomorrow. So see you tomorrow. Bye bye.